Hey everyone, and welcome to another edition of the Buddy Study Group for Worksite Solutions. And we are joined by a very special guest today. We have John Schuman here of Transamerica, Head of Core Products and Distribution. And we are going to talk to John about really, what he has eyes on from a high-level carrier perspective. And we want to pick his brain a little bit about what works well, what might not work so well for enrollments from his experience, what he's seeing out there in the field, and really how you, as somebody who's out there working on group cases, how you can really set up conditions properly for successful enrollments. So feel free to ask John any questions that you have by using the chat. I'll make sure they get asked to John. But otherwise, I think Mark and I are gonna poke and prod him and ask him all the questions that we think are going to be really good learning experiences for you. So, John, we really appreciate you being generous with your time, not just now, but always. I'd like to just ask you the first question of, can you give folks an idea of your experience in the group space, your role with Transamerica, and things like that, so we can get to know you a little bit better?
Sure, absolutely. And thanks for having me. I've been at Transamerica now for just short of 6 years. I've been in the voluntary space here, as well as our group life, group disability, and absence. Prior to that, I was in the benefit space for about 6 years at a different carrier, but I grew up in the 401k, 403b defined benefit world. I jokingly say I was voluntold to the benefits world. My boss at the time asked if I could take over our executive DI, executive life, and our worksite life with all the riders that we're going to be talking about today. So, about 30 years of experience in the employee benefit space. And, I think, at the most high level, if I go back to when I started, you enrolled on paper and filled out your benefits and maybe had an 800 number to call. And we've seen a huge shift, especially in the last 5 years coming out of COVID, which I know we're going to talk a little bit about today about best practices and how to get good results. But more importantly, making sure the Americans that have access to this product know what they're buying, know how to use it, but at the same time, not miss that opportunity of the guarantee issue. Because if you miss it, then you have to go through all of the health questions. So buying it young and healthy helps with rate and it helps with guarantee issue.
Yeah, appreciate the introduction. Mark, you can feel free to ask some drill down pieces to this, but I want to start super generally with you, John. Given the role that you're at with Transamerica, a very large voluntary benefits carrier, you see a lot and you have hands on a lot and you have eyes on a lot. But if you were a teacher, what sort of behaviors get an A plus in your class, John, from brokers who are really, or even just enrollment partners who are charged with a lot of what you're saying, making sure employees can make informed decisions, don't miss key windows, things of that nature.
Well, first I'd say I might know a lot, but it's a little about a lot. So I appreciate any questions that come in through the chat. As you think about these solutions, hybrid life with LTC, as well as supplemental health products that are employee paid, it really comes down to two things at the highest level. One is the client looking to add these products to solve a need, or is the broker, advisor, consultant, whomever they're working with, looking to add these to check a box? Because there's very different outcomes, and I would kind of put it in the camp of efficiency versus effectiveness. You can do these things very efficiently, but that doesn't mean people know how to access, what to purchase, how to actually use the benefits that they do purchase versus having an effective campaign that is tied to education and use case of how these things should be used and how important they are, not just to you, but your family as well. So, understanding the motivation of why we're doing it can definitely lead to better outcomes.
Actually, Jason, that leads me to a kind of a drill down follow-up question, because I do think that's a strategic question for a broker. You have an opportunity to bring a new product in, and maybe they're not doing it for the right reason initially, but you have your foot in the door, and over time you could build momentum and education. Should you wait until you have the right conditions, or should you take that opportunity to get the program installed while you have it?
Yeah, it's a good point, Mark. And my experience tells me the type of organization that you're selling to should dictate that. So if it's a white collared group of highly educated people, that's going to be very different than a blue or gray collar group with thousands of people that are tough to reach, that don't have a website because or I'll take it back, they do have a website, but they're not at their desk all day. They're on a shop floor, they're in retail, and the outcomes will be very different to get someone to enroll that's not in front of a computer, that doesn't understand, opposed to having face to face or call centers to help attack this for them. Conversely, white collar attorneys, doctors, engineers, accountants, CPAs, they're at their desk. And when they get an email, they can click on it and access it. And then we can make wildly inaccurate assumptions that they may know a little bit more about these products as well and why they're important due to the fact they're in a income bracket that maybe already has a financial advisor and they understand what life insurance is. They've been approached about purchasing long-term care and didn't do it or was unaffordable at the time or just delayed in general and now have a chance to buy it without a blood test, urine test, or a physical.
That makes a ton
Yeah.
of sense. So if you can picture that the client is going to be a good audience and you have access to be able to do ongoing education, then it might be good as long as you don't kind of cut them off of their GI window, right? Because that's the other piece to it is you don't want to lose access and have to go through medical underwriting like you said earlier.
Yep. And we typically offer 3 years of GI. And anyone that purchases within that 3 year period for the rest of their time working at that organization can buy up to the GI. So we can make it a real example. They get offered in 2025. The GI is 100,000 or 150,000. They buy 50. Anytime after 2028, they can buy the remainder of their GI without any medical or health questions.
It's awesome. And that's a real Transamerica sweet spot. Most of the other carriers are not that liberal or flexible to do that. Some of them will only offer you one GI window or 1 year, but the 3 years gives you some time to really, you have room to run with it.
We've been doing this so long. We know how our book runs. We know where the pitfalls are. So we feel very comfortable with the idea that one, maybe someone missed it the first go round. Two, financially, they weren't able to. Or even three, they weren't in the right stage of their life, but now they've gotten a little bit older. They've had a family. They have a mortgage because they bought a house, all sorts of extenuating circumstances. And that's why we let people buy up that did buy within that window at the initial outset.
So you made a really good point, John, that I want to go back to, and it's talking about how, each employee setup is different. Each workplace setup is different. There are going to be folks who, when you send out email communications as part of an enrollment, you are actually sending something directly where their eyeballs rest 90% of their workday, right? If
Mm-hmm.
they're not in the break room, they're probably looking at their email or have it open just to their left on another monitor. But what have you seen as far as folks having success with those employers where a large amount of their employee base is working on a machine or, performing physical labor? They don't even really have an email that they use. They just have their employer communicate to their personal email. Where do you see the success there? Is it still face to face is kind of king? I know COVID has changed a lot of things, but interested to see what you see there.
Yeah, I would say, and I'm going to say four. I could end up with five, but four ways to enroll. One, and I strongly urge against it, is paper. Filling out apps, scanning them, and sending them in. That just becomes a nightmare for the carrier, making sure we understand um, their handwriting, their numbers, and everything else. So
It
paper,
hurts me to even think about, to be
yeah,
honest.
and it's a lot of work for the people on the call to do paper. Second, in a lot of these larger groups, we see sometimes carve outs where they're purchasing some for a select class of employees. And as crazy as this sounds, unlike other benefits for carve outs, it needs to be discriminatory based on the workplace. You can't say all redheads, but you could say everyone with this title, everyone with a salary above X, everyone with years of service above Y. In those type of cases, for those people impacted, a very easy way to enroll is via spreadsheet. And we give you a template, you send it in, and we process it. And we can upload it directly to our system to avoid manual intervention. As you start to think about the rank and file population, there's a couple ways to do that. One is that old school self service, and you slap it on the Ben admin system. And unfortunately, what we find by the Ben admin carriers, you'll have your healthcare, your HSA if it's high deductible, dental, vision, life, disability. And these products are usually down by pet insurance and legal insurance. And people avoid that because they're already have finished up their health. So when you do self service, a very effective way to do that is what I'll call an off cycle enrollment. So if the group has a January 1st effective date for all their benefits, maybe do a 7/1, 8/1 enrollment for the UL with the long-term care benefit. Because when you do that, you get full mind share and it's the only thing being enrolled. Our results are usually triple on self-service off cycle versus on cycle. When you enroll this self circle with healthcare, we typically get about a 5 to 6% enrollment rate. We do it off cycle, we're usually somewhere between 15 and 18%. So making sure you can get top of mind is a huge difference. Other things that we've seen in the self-service environment, if the employer is willing to provide you um, mobile numbers, and pretty much most employers now do around business continuity. So if there's a event that happens near them, or if you have people that travel, they want to be able to reach out to them and let them know. A lot of employers have embraced the idea of a texting campaign. So you get a technology, we can help you with that. I'm sure Mark and Jason can as well. And they would get a text message with a link either to material on hybrid life and long-term care or directly to the Ben admin site. And best practices there is usually three notifications. One, enrollment is opening up in X amount of days. Two, right in the beginning half of the enrollment, reminding people. And three, right before enrollment closes. And it gives people three opportunities. Another thing we've seen in this space is partnering with an enrollment firm, which I know Mark and Jason can help you with. And that could be a text setting them up with a counselor to talk about the reason why you would want to purchase this and what it means to you and your family. And from there, either being able to help enroll you directly or do some share screening so that individual can go in and purchase right on the spot. The older way of doing things, which is making a little bit of a comeback right now, is that traditional face to face, boots on the street, where you and your team are hiring 1099 enrollers to go out and meet with people. And that could be group meetings, that could be individual meetings, What I've seen works well in large groups is group meetings with signups where you could come back and speak to a counselor one on one. And then you can take into account your own personal solutions or own personal situation. Are you buying this for LTC or are you buying it for the death benefit? Are you buying it for both? What other insurance do you have and how does this fit in? So those would be, I think I stuck to four. I think that was pretty close. The four ways to get in front of large groups of people. And, sometimes the employer does put their hand up and doesn't want people off the line or off the retail floor if it's a retail organization. But then you have other groups that are 100% engaged and they don't want to do all the work to add a new benefit that's not going to get the utilization of why they added it. If you think about that, at times, and all of you have your preferences, how you do business, um, your ability to influence groups that want to go self service, I would say should be, or where it's effective, is more than just about this solution. So they can help their employees with all of their benefits to understand how the interplay across the board goes.
John, let me ask a follow-up question because you alluded to one of those four methods was a spreadsheet or census enrollment for the employer funded. What is the impact that you see on a carve out for employer funded on the voluntary results? Are you seeing a correlation there, or it's really doesn't affect the voluntary as much?
What I would say where it affects the voluntary is how close people get to purchasing GI. So when I say that, everyone asks for these big GI numbers. We've been doing this for decades. Our average policy is $47,000 face value. And people ask for 150, 200,000, like big numbers. And a lot of times we'll say yes because we know there's not a lot of risk because nobody buys it. But if you had a group where you were doing 50,000 or 100 as employer paid, that cohort of people typically will buy up to the GI amount unless they already hit their GI. So we typically see bigger face amounts when it's a employer paid with a buyout.
That makes sense. And because the employer is funding it, they have more of a budget to buy more voluntary.
So they buy their 47 or 50 and the employer bought them the 100. So their out of pocket expense remains exactly almost 100% similar to what a voluntary case looks like.
Yeah, we talk about employer funding a lot on this study group, and I think there's a real psychological effect from taking an employee to having to go from nothing to something to giving them something and see if they want to purchase more, right? I think psychologically it's much easier to get over that hump when your employer has already put something in place for you. Not to mention just the kind of extra funds you have to play with. But if you're starting from nothing, it's harder to get over that hump than if something is already in place for you.
And just to add to that, Jason, because I totally agree with you, these products are 100% portable at the same rate. There's no increase of cost. So they can take it with them at the current rates and just move to ACH debit or something like that to fund it. I think the second part, just to build on that, um, oh, I was, is the idea, which is you can see some of this in the Wall Street Journal. It comes out now and then. The average American skeptical of corporate America, but they believe their employers are doing the right thing for them. It's everyone else's employer. So if the employer is purchasing it for them, it must be good. So I'm going to buy more. But if, it's a really interesting connection between how people view employers to how they view their specific employer.
Hmm. That's an interesting point. Um,
We have a question in the chat,
yeah.
and Gail had asked about what is the average age. I had a similar question about, kind of what's that sweet spot and what people are willing to spend, kind of average premium. Any kind of stats you can share with us and the buyer profile there?
I can look while we're talking on age. I know our average premium amount is about $50 per week. It's about $600. And that works out to be an average face amount of 47.
$50 per month or per week?
I'm sorry, per week. About
$50 per.
$600.
So like 200 a month, you were saying, or $50?
It's $50 a month. I'm sorry,
Yeah, okay.
$600 a year. Yeah, a
600 a
month.
year. Yep.
Yep. Which is an average face value of 47,000. So we
Gotcha.
could look at the rate tables to figure out
That makes
what
sense.
the average is.
Yeah, and when you do work with the white collar groups, and you do a lot of education or you do the employer funding, the averages tend to be a lot higher. So I think at Buddy, our averages are actually closer to 2,500 or 3,000 a year. So 4 or 5 times that average. So it does make a big difference. Even if your participation is the same, you're getting 4 or 5 times as much premium by following, the employer funded strategy.
Agreed.
Yeah,
I'd
Raymond
have
has
to
a
assume, and it's probably incorrect, but the employer paid, they're typically, probably over the age of 45 to 50, because it is the leadership of the group, which
Right.
makes the rate per thousand even higher, getting up to that larger
That,
amount.
that's true. Yeah, exactly. We do see a higher average age on that for sure. Probably in the uh, low 50s versus the low to mid 40s for the
Mhm.
overall group.
So Raymond had asked in the chat, do you encourage people to add to their long-term care benefits if the base coverage is low? If a person is young but they have 5% COLA and they keep and pay the premiums, owning a long-term care benefit is a good deal. So I think Raymond's essentially asking, um, do you encourage folks to add on to what they have if they start at a low amount? Is that correct, Raymond?
Um,
Sounds right.
We'll go with it. And
okay.
if it's anything different, we'll ask that too.
It's a good question. It's if you already have standalone LTC, this is in addition to, right? Not instead of. If you're buying it at the workplace and this is your only coverage, that's one of the reasons we let you to continue to buy up to your GI amount, because it's a mix of your potential need of the product and your financial means to purchase more. But that's why we let you to continue to purchase more through your lifetime at the company.
Yeah, I think that's just a good question to get inside your mind as far as how you sort of position that. Like, I already own long-term care insurance, or I plan to buy more long-term care later, or I had this set for a different date in my mind, right? Maybe I'm not ready, but it's in my mind. I plan to. How do you sort of balance that? Because we go through it too, because we're talking to groups where maybe we have a 39-year-old employee who's thinking, yeah, I care about long-term care. I do plan to do it. I've experienced it personally, but I didn't want it to be right now. Are you really going to make me do this now if I want GI?
It's an interesting question, and when I've been at some of these long-term care conferences, I've heard it actually flip the other way. So if you do in corporate employer business and retail business, you're using the workplace without the a cheaper cost, um, guarantee issue to buy what they can, and using that as the impetus to sell an individual long-term care policy on top of it. So the way that our solution works is 4% of face value for 25 months. And we do have an extension rider that lets you go to 50 months. So if you have a $100,000 policy, you're using it for long term care, that would be $2,500 a month for the 25 months. I think I did that math right, but 100
You did.
divided by 25. And then you would get that for 50 months. That might be all your GI is based on your group, based on the demographics. And then you may go out and sell an individual long term care policy or a hybrid life long term care policy that is individually underwritten to supplement the rest. So, getting more people to understand what these solutions are through the workplace could be a great opportunity to increase your retail block of business.
Yeah,
Yeah, and
it's
I think
different. If you were to try to do that stacking, you'd have to do individual applications, individual underwriting for each of those purchases. The beauty of this being a worksite product on a platform is they can just add their coverage self-service, right? And it is approved by as long as you're doing it within that enrollment period or multiple enrollment periods. So I think that's a great strategy to help ease people in, Jason, to what you're describing. That 39-year-old buying the minimum doesn't cost very much, locks in their lower rates based on their younger age, then they can decide later, and it's just like dipping their toe in. And as their income increases and budget expands, they can kind of, do more when they're ready to do more, as you had.
yeah, and I think in our education two groups, we talk about these plans a lot as really good starter plans, not only because of where the benefits are at. You may get the employee who's really, really sharp about long-term care who's asking, is this enough? Really, there's an individual evaluation to be made there, but this is a good starter plan, not just for where we're dialed in on benefits, but how easy it is to access. I think that's a huge deal. Maybe what we don't talk about enough is for those who already own long-term care, it's a great cap on a already pretty good long-term care plan to be able to add and access, again, really easily and effectively to add a complement. Maybe they've got a reimbursement plan and adding an indemnity plan would, really benefit them. And I think, without even intending to, you bring up a good idea or a way to position this is that, folks who already have plans with inflation protection that they want to have keep growing, right? You could claim on essentially your starter plan. You could claim on that employer plan, keep your benefit growing if your claim is not so large that you have a need for using both plans. I think there's a lot of really good synergy and strategy that you can use between a worksite and individual plan.
One thing I'd be remiss if I didn't say, and I don't want this to be a commercial for us, but
Yeah, you're
when
allowed to
no, no,
commercialize
We
when
this a
wouldn't
little bit.
respect you, John, if it wasn't. So don't worry about it.
We're salespeople here, John.
we're the only ones in the workplace space that if you buy up over time, you don't have multiple policies. So if you buy $50 a month now and $50 a month later, it's only one payroll deduction for the employer at $100 a month. More importantly, when you go to retire and your budget changes, and instead of having a $90,000 face value, you want 45, you would get a blended rate. Half of it would be from the purchase at the older age and half of it from the younger age. The other solutions done through the workplace, you would own two policies. And if you wanted to go from 100 to 75, they would tell you to drop one and buy another for 75. We have the infrastructure to get you to the face amount you're looking for and make it very easy on benefit administration systems for the employer because in their systems, they only have room for a certain amount of deductions without paying more money. They pay for payroll slots and it's a cost for each one they use. So we're making the employer's life a lot easier.
Probably one of the benefits as well of the Universal Life Flexible Premium product just has a little bit more optionality after you purchase it to make changes later.
Yeah, and we can do that through a high face amount or high cash value. We don't have a preference, but you and your client get to decide what type of solution you're looking for.
You would have been remiss if you didn't mention that, by the way. That's an important piece that I'm not sure I was fully aware of, so I'm glad you said it.
Yeah, one other thing I'll mention, and Wendy might also kind of be thinking this too, is that life insurance for that younger
Yeah.
person or for the female clients, right, that might not have life insurance at all. That makes it also more of a no-brainer that even if I don't use the long-term care, I have that life insurance benefit that's going to carry with me throughout my life. I think that that's a big deal, the hybrid concept in general. I think it appeals just to that age bracket so much more.
I mean, a
Hey, John,
hybrid,
I'm
yes.
sorry. I just had a quick question, and it can be a positive. I don't think it's a negative, but the monthly benefit of the 4% for nursing home and 2% for home care. Do you
Mhm.
think that'll change, knowing that most people want to be home being taken care of, and yet they only get 2% of that monthly?
Great question. Our contract allows us to go 6 and 4.
Oh,
We,
There are separate accelerations that can depend state to
what
state. They are
state?
state specific.
yeah,
So,
and we're very careful on the 6 and 4 because there's usually it's a little bit more of a run on the bank out of the gate.
right.
So that's one. Two, if you're talking about home health care, we have a sister product that's called a critical care instead of long term care. So the long term care is 7702B compliant. The critical care is an indemnity product. And the way that works is you get your 4%, and you don't even have to spend it on healthcare, Wendy. You could use it to put a ramp on your house because now you're wheelchair bound. You could put a bar in your shower. The most obscene one I've ever heard was someone bought an RV and wanted to see the country before they passed away. And they used their stream of payments to purchase an RV, and they went on a long road trip. So the
Interesting.
Yeah, so the critical care is an indemnity. It's still two ADLs. It does not need to be permanent. That used to be a drawback in the critical care. It had to be permanent. So if you had a stroke and you needed rehab and you were only there for 6 weeks, you could not access that benefit. We've been able to update our filings and it's no longer permanent. So it works the same way. You just can you do it use you could pay your niece, your nephew, your cousin if they took time out of work to take care of somebody.
That's
Yes.
excellent.
So one thing to add to that, Wendy, is I think, and correct me if I'm wrong, John, there are three states that still do operate on that permanency language because they use the TransElite product. I think it's New
Um,
York, Vermont, and Virginia may still be under the permanency, but the chronic care rider on the UL10 functions exactly like you mentioned.
yeah, great point, Jason. We try not to sell our Trans Elite product. It's a little bit older. Our UL10 is about 24 months old. So we refiled, built a new
Okay.
product. Um, and that flexibility, what we see in all candor, without making it political, in the red states, people purchase the critical care. In the blue states, they purchase long term care because most of those states, similar to Washington, that did enact a rule on long term care, and you're taxed a payroll taxed if you don't purchase. A lot of those states, New York, Massachusetts, New Jersey, Michigan, they have long term care legislation in their state house. It's been there for 2, 3 years now.
Yep.
Wasn't expect. I'm not expecting much to happen in those states. Talking to our lobbyists and our attorneys until the midterm elections, and then you might see things advance. But I'll give you a real story on that. We tried to get our critical care years ago. I'm talking a decade, approved in Massachusetts, and they would never approve it. And it was, I'm a Massachusetts. I was a Massachusetts resident, so I jokingly said they didn't like people accessing money that they couldn't tax. But we filed our long-term care there 24 months ago. They redlined it. They have long-term care legislation in the state house, and they redlined our document to look like critical care. So our filing people called this DOI, and they said, send it in. We were approved on critical care the next day. So even these states looking at potential mandates, we don't know what they're going to look like and what that means. But every state has their own little process for approving.
They're all like little snowflakes. Each one is different.
Yep.
Um, Yeah, so I think even in those older states where there's permanency of condition required, those states may not have other options, especially New York small group. You may find yourself in a situation where Transelite may be the only game in town. And I think, David and I were recently working on a case in New York, and we talked through the permanency of condition of Transelite. And I mean, I thought his take on it was really, really good. In many cases, what you're going to want to really protect against is that sort of catastrophic, ongoing, truly chronic condition, which is, what the Translate contract would require. So in many cases, you know, it's not worth getting bent out of shape, especially if that's kind of the only game you have in town to offer. It's still going to check a lot of boxes for you. Again, like you mentioned, John, you can't necessarily go on 6 months of rehab and come off and receive benefits for that time where you're rehabilitating. But at the end of the day, there's still a lot of value at protecting against those truly chronic conditions, right? Um,
Yeah, I agree. And, maybe a strategy in a place like New York would be to purchase and have the client sign up for the high cash value. And if you bought it young enough, use that cash value to pay for some of your medical expense if it's not permanent.
yeah, yeah, that's a good point. Does anybody else have questions they'd like to ask to John? So
I
John,
do
see,
see one in there, gender specific. They're unisex rates, and we can do uni tobacco as well. It does mean people that are non-smokers pay a little bit more, but we have the ability to do unit tobacco as well.
perfect. I know we have a lot of folks that represent brokerages on the call, many of which do a lot of individual long-term care business. Some do a healthy amount of group plans, some don't. Is there, kind of any best practices or advice that you could provide for brokerages that you see working heavily on group opportunities?
Yeah, I mean, I think if you're working on group and you have people in your organization that work on individual and retail, um, it is a great lead generation source. As you're talking to people and meeting with people, you will come across people. You know, I, Financial services industry in general kind of has let the average American down. You call a brokerage firm or an insurance firm, they want to write you a $10 million 10 pay, not a 40, $50,000 policy. So having entree without a lot of work to find new people to add to your block of business, the employer market gives you that opportunity. For those of you that work in that high net worth, mass affluent space, some of them may be decision makers, which could get you an entree into an organization to grow your employer block. So it could go either way, but I would say, and Jason, you said it before, like we're salespeople, you have to ask for the business, and being able to do that really opens up a ton of new opportunities.
Yeah, I'll mention another point for Transamerica's products is you're working with a business owner and they have a certain expectation that they want themselves a higher level of coverage. Transamerica has the highest voluntary buy-up level, which is 500,000 face amount, but 1 million with that extension rider for the long-term care, plus another 500,000 extra death benefit with the restoration rider. It's 20,000 a month of benefits. So it's not necessarily limited to those starter plans that we're talking about. You can get the business owner 20,000 a month of coverage or extra coverage and then offer voluntary because they do want to offer it and have their employees, their key executives, have access to this type of planning as well.
I
So I
mean,
think
people
there's
will commonly knock on webinars, Mark, that we have with employees. Why doesn't this have any inflation protection? I'm a smart consumer over here with a good question. This is a good way to start building in some inflation protection, especially if you've waited a while to plan, and inflation protection can be quite costly at your age.
As you do the buy-ups outside of GI, there is still no medical. There's no urine, blood. There are some questions. We may look at the MIR database, but it's just questions you have to answer if you've had a heart attack recently, been diagnosed with HIV or AIDS, or a couple other things. But there's never a time you're going to have to send someone to a facility to get a test or someone go to their home to get the information.
Yeah, I also like the rollback mechanism where if they don't qualify, and like John was saying, maybe 15% don't qualify, the consolation prize is they get the maximum guarantee issue for them instead.
Oh yeah.
So like that's a no lose as long as you can say, hey, this is what you qualified for. Congratulations, either way. It's not a negative necessarily that they
Yes,
didn't.
Yeah, we don't take away the GI because you weren't able to get the buy-up.
yeah, and that's a little different from the individual side because we all know it on this call. We've dealt with people who have been declined on the individual side, and we may be able to get them another option, just not without work and not without many clients feeling like a sucker from their first decline, right? At the end of the day, we can even appeal declines in the individual space, but it's hard to overcome that kind of disappointment. So to get out in front and say you will, no matter what, walk away with something if you want something, is a great position to be able to be in. Now, Gail had a question for you, John, from the chat. I'm going to add a little bit to the question. She asks, is there a minimum participation for voluntary only? And just to add to that, I want to see if you have any perspective on like at what size of group does voluntary only become a much more viable scenario for good participation or good average premium? Because I think we set the bar pretty, I would say, up there for where you'd be good without any sort of employer funding. Like we recommend it on all cases below 100 or 1,000 lives. But I want to see where your kind of threshold is, where you draw that line in the sand.
Yeah, so from a number perspective, the way these contracts are filed, we need 5 people enrolled to be considered a group. So whether you have 1,000 employees in 5 or 5 employees in 5, we need 5 enrolled to constitute what a group is. From a participation perspective, a lot of it comes down to the enrollment. If we're doing self-service voluntary only, 3 to 5%. We're doing some type of hybrid, more of a pull where people can reach out to people as well as self-service. That's around 10%. And when we do full active enrollment, off cycle, people they can talk to face to face, call center, we get closer to 18%. Smaller groups typically have higher participation. It's just a fact that it's easier to get in front of 25 people than to get in front of 2,000 people. So, if I looked at our numbers year to date, and ironically, I just got them today. I didn't actually get them for this reason. Groups with 100 to 500 employees, we typically average $120 per person. So to put that into perspective, you have 500 people per head, we average 120. So if that was 10% participation, 50 people, we can start to figure out face value. As we get to groups of 5,000 or more people, that average premium per person drops below $20 per eligible. more diverse workforces, tougher to get in front of people. So a very different outcome when it's large versus small.
So, just this is Gail. Real quick question on that. With Transamerica in the past, I mean the past, um, what happens if, say, you are in a group of 100 people and you don't get that participation? What happens to the applications and the people who did apply? You
So
have to
you
go back
got
and say we can't cover you?
so let's just make it real, just so I make sure I answer correctly. So 100 people, you got 3 to enroll, not 5. Is that what
Right.
you're asking,
Yeah.
Gail?
And yeah. Yeah.
So we can do one of two things. One, we can work with you to do another quick open enrollment,
Mm-hmm.
to go back and find 2 more people to satisfy the need.
Mm-hmm.
Two, if the client's unwilling to do that, we
Mm-hmm.
wouldn't be able to issue the case by the state
Right.
filing. We're not allowed to.
Right. Yeah, I mean, I think with a group that small, to your point, that wouldn't be the issue. But I know years ago we quoted Transamerica, old Transamerica, if you will, with an 800-person law firm, and there was just concern if we didn't get the participation at that time. It was a higher bar to meet. We'd have to say no to the people who already had applied. So that's
Yeah,
kind of where I'm coming
yeah,
from.
let me jump in a little bit too, because we didn't kind of mention this in the beginning. Transamerica Worksite Benefits, where John's, one of the leaders,
Hmm.
is a different company I would think of as Transamerica, the individual product.
Right.
Yes.
Okay.
So very different rules of engagement, different people, different system. If you even have a bad experience with that on the individual side, you're working with a
Uh-huh.
whole other company. So I would think of
Got
this
it.
whole different.
Yeah, the old multi-life LTC we still have it in place. It's a closed block. We're not selling it
Sure.
there anymore. We're using our hybrid life and LTC in its
Hmm.
place.
Hmm.
And like I said, it's 5 people. It's not a percentage of eligible.
Got it. Okay.
Thanks, Joe.
Yeah, and I think that just drives home the point, Mark, just to add one more quick thing of why employer funding is so important, right? Because we've seen groups of over 100 lives
Hmm.
that have ended up with less than 5 apps of participation,
Yeah.
just
Yeah.
trying to do things all voluntarily. You're obviously putting in your best effort to make sure that that doesn't happen, but sometimes those things are just really out of your control. And I think
Right.
employer funding just gets you over that hump with no
Hmm.
headache or worry, and it could be done at a cost that's trivial to the employer. So I would say, you know,
Right.
making that effort to try to even get a small amount of employer funding
Hmm.
guarantees that you don't have to ever have that conversation.
Got it. I agree.
Yeah, Steve asked a similar question, John, I think, which is, does Transamerica plan to offer an inflation rider? You're probably thinking back, on the past products. What's your temperature internally for where you guys want to go with product enhancements and innovation and things like that?
Yeah, I would say the near term and midterm, we've talked about it, but there are no plans for an inflation rider.
Mm.
Um, it's a very different, trying to keep these easy to get to market, easy to administer, and make sure we can get to folks. I would tell you anything's on the table as we look at a roadmap. And the state of Texas is actually looking to mandate inflation riders and all these products. So if we have to go that route for the state of Texas, it's just as easy to build for the other 49 states plus Puerto Rico and Washington D.C. But at the moment, there are no plans for that.
What thoughts do you have as to where you think you do want to go with the product and innovation and niches or differentiators? What's your thoughts, John, on that?
There's been a lot of talk about value adds to throw alongside of this, whether it's a company that can help you find a facility, whether it's a company that assists with bereavement. There's other companies out there that assist with if people enter it passwords. So when someone passes away or becomes incapacitated, where is their bank password? Where is their Facebook password? So there's been a lot of companies, a lot of private equity money floating around value adds that would come alongside as a sidecar. From a product structure, there really, hasn't been much innovation other than the extension rider, which allows you to go the 50 months, which is really just pennies of additional premium. And then the restoration rider that still leaves you with a death benefit should you exhaust all of your face value through LTC payments.
Yeah, and I think those on the individual side are kind of blown away that you get both long-term care and life insurance because for many years, as we talk about hybrids, it's an either or. And I even saw a post on LinkedIn from a really top specialist saying there are no hybrids that give you both. Like, well, if you look at the group side, there are that give you both. So I think that's a wow factor. That's a great selling point too.
Kind of took the words right out of my mouth. I think the products as they stand now, for those of us who have been primarily individual, those are innovations in themselves, but definitely still excited to see what the future holds because it's heating up here. Ken
Yeah, maybe.
asked about the state of Puerto Rico for Transamerica's product. Do you guys approve business in Puerto Rico or any other territories?
I know our critical care riders approved. I can follow up with you, Jason,
Okay.
on our LTC rider. We we don't do how to phrase this. We do a lot of business in Puerto Rico, but the business is situs where the organization is. So
Stateside,
we have,
right.
yeah, we have a lot of organizations that have employees in Puerto Rico that purchase,
Right.
but it's a situs from another state. So I don't know off the top of my head on the long-term care.
That makes a lot of sense to me, like satellite offices
Mhm.
or what have you, or remote workers that are in Puerto Rico, things of that nature. That makes a lot of sense to me.
And
Yeah, and I'll
expats working overseas, as long as they have a U.S. address and get paid in U.S. dollars, they can purchase as well. So if you're doing time in Europe, Asia, wherever you may be, you'll have the ability to purchase this. You just got to be paid in US dollars and your policy information mailed to the US.
And I'll also mention New York is one of the states where Transamerica has a product where many of the carriers don't, as we all know. So that's another opportunity. Going down to 5 lives with the guaranteed issue there.
Yeah, under 100 lives. That is your play in New York for group long-term care products like this. Trustmark, as we know, offers a 7702B rider in New York, only available to 100 plus. So if you're working with any small New York groups, they deserve a solution too. As a former New Yorker, it can be tough out there. You can feel like you're on an island so many times. Brokers, employers, they're just happy to hear they have something to work with in the state of New York. So don't discount that. I know we kind of can tend to avoid it like the plague, but there are still opportunities there in the
I'd
most
also
consumer-centric
say
insurance state, so they're called.
more of a more of just a talking point on the Trustmark product that you mentioned, Jason. If you purchase it in New York, your certificate's going to say Arkansas. So in the states they can't get approved, they use a trust product and you become a member of the trust. It's not your own individual group. The states have not come back. That's why we've not done this yet in New York, Virginia, and other places. The states have not come back on these products specifically, but I'm sure a lot of you are familiar with states starting to on other solutions looking to outlaw trust products because they don't have jurisdiction. So I do know from talking to a lot of producers out there that will write that business, and that is great. They're a great company with great solutions, but you'll get your certificate in the mail. It'll say Arkansas, not New York.
Yeah. I also want to ask a question. Wendy had asked about 10 pays, and that's a very common request we get from people in the study group, especially those on the individual side. Feels like Transamerica is uniquely positioned with the flexible premium product to potentially offer a 10 pay? Do you think that's a possibility at some point, or it's just too different from a worksite product to do it?
I don't see us doing 10 pays, but you can overfund and then not have to pay in the future. But going to a pen 10 pay structure, I think would be almost a heroic and Herculean task for a company to figure out Sally wants a 10 pay, Billy wants a traditional, and being able to deduct and remit appropriately.
Anybody else have any questions for John? John, is there any words of wisdom you'd like to leave everybody with?
Um, I'm not familiar with the New York Life product. I'm happy to look into it for and get back with Jason and Mark. I would tell you, and our competitors are Heritage, which was the old Allstate owned by the Standard, Chubb Workplace Solutions, and Trustmark. There's really only four of us in this space. We're all a little bit different. Allstate does it on a whole life chassis. At Trustmark, I believe it can be a whole life or a UL. And at Chubb, it's a permanent term. So it gets very expensive and eventually ages out when you may need it the most. What I would say just around this market in general, it is growing dramatically. If I think about my time in the benefit space, people used to call vision, dental, life, and disability ancillary, and these type of things voluntary. With the shift in the market, most companies now offer life, disability, dental, vision, and it's become much more of a core benefit. And these type of benefits we've talked about have really become more ancillary like. They're being given and offered more and more, which is great because we have more people to talk to and more companies to work with. But with that, we've seen a lot more go to that self-service model, slapping it on a Ben admin system and saying, good luck, figure it out on your own. So what I would say is you guys are uniquely positioned, being experts in this space, to talk to your centers of influence and your business clients, and then talking to them about the need not only for this solution, but to get mind share and enroll it when people will give you the time to talk about it. And that makes all the difference in the world, right? Just having something you can purchase that nobody doesn't help anybody. But getting it into the people's right hands, understand what they're purchasing, why they're buying it, and the overwhelming need for it will lead to a great experience for you, the employer, and the employee.
Couldn't have said it better myself. And I think we're very like-minded on a lot of things. I think you have a different language given, the side of the industry that you come from to communicate that. But I think
Mhm.
that's precisely why this session is so useful to everybody because Mark and I can come and preach our knowledge up to the minute that we get it. But I think to hear from somebody of your esteem in your role saying some of those same things based on your experience is very, very helpful. So we really appreciate the time and the wisdom and knowledge that you shared with us today, John. I thought this was awesome to really kind of get all this out there for everyone. Mark, do you have anything last minute or questions,
No,
comments?
no, I echo what you said. Thanks so much, John. Appreciate you being on.
Yeah, appreciate the opportunity. Love working with you guys. And, you know, these guys can track me down if you need anything. We'll make sure we get back to you quickly.
Awesome. Well, again, appreciate the generosity with your time and for being here with us and for the great conversation. And appreciate all of you for being a part of it today, asking your questions, chiming in. You make these study groups what they are. I appreciate you all. Everybody be well, and we'll talk to you this time next week. Have a good one,
Thank you.
everybody. Thanks again, John.